How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Euro versus US dollar, EU. As you can see, prices retracing as we expected. We talked about that in that previous episode. It's on TradingView. Wasn't able to get it on the other platform, but we can see price is making a swing high after breaking what? Buy side liquidity pool. That could reset the model. Because if you're following the trend formula, breaks a swing high, a higher swing low needs to form. So once price raids buy side liquidity, there is a chance a retracement can occur. Unless the algorithm is at a certain schedule and time and it needs to run a certain liquidity pool by a certain time of day for an event, etc., it will get there and it will get there quickly at times. But normally when price breaks a swing high, more than likely you should be anticipating, okay, a retracement could occur because we just liquidated buy stops. Sellers can be induced into the market now. Anybody whose buy stop order was hit could be sell stops too. And those sell limits are going to now come in and go short. And those are triggered. And you'll see some type of pullback until what? The market makers change their mind again. They run sell stops and then change price again to go back higher. That's what it's constantly doing over and over and over again. We can also see on the recent range that it created, from this swing high to this swing low, we have a equilibrium point here. So it's the same idea. March's opening price is the equilibrium or fair value. 50% of this range from this swing high to this swing low, there's a range. You can see how we do have the OTE settings, right? Auto trade entry areas. Not saying it's going to have to go into these areas for a higher swing low. Sometimes you see opportunities where price returns right back into equilibrium and then it runs higher. You'll see that from time to time as well. But it's the same idea of buying near fair value or vice versa, selling near fair value. That's also a thing. So if price opened here, there could be an opportunity just getting a buy close to the opening. You don't have to get it exactly below it, but there are going to be times where you're forced to buy in a premium, or the only spot that price thinks it's ready to start turning around is fair value. So it'll come here and turn around. We also have other things outside of that. You can see we have the 20-day look back high. That could be an area where it makes a higher swing low without around that region, a sensitive price point. Or like I said, the only thing that could be occurring here is a mid-month reversal. So price reversing and going short now and changing trend, meaning swing lows are going to be forming lower. Swing highs are going to be forming lower as well. We would potentially fail to break this high and then price would sell off. But I really don't think that is occurring. I do think that price is going to continue trending higher. I still expect this to be bullish because I see the bond yields have been selling off, and we'll get into that as well. And dollar's been selling off, and yen's been gaining strength. So if we were to look at, let's check the dollar first. You can see how the dollar's pulling back. We talked about these fair value gaps the last episode. I'm really concerned about this one because it's the one that is my entry technique that I like to see. A swing low ran through with a fair value gap. Swing point is inside the fair value gap. Price is probably going to use this to make the lower swing high, and then price sells off. We did mark this off because this could be also another area where it would want to make a turning point there to sell. If you also measure this too, from this swing high to this swing low, you could see how we have another equilibrium price point. Price could pull back into this range and then sell off. Could go into OTE as well, auto trade entry, and then sell off. But within these regions, you can see how we're being very methodical and objective with how we're going to look for entry techniques and what specific areas are going to be more ideal for that case scenario. Unless this is, like I said, a mid-month reversal and price is going to continue trending higher again and getting back above March's opening price. It's possible. And like I said, the other scenario would be, okay, price may consolidate for a week or two, which would suck. But I don't think so. Markets are very volatile right now. See S&P, gold, Bitcoin, a lot of things at all-time highs. So I think the market is a very interesting point right now. If we look at the Japanese yen, like we're living through history. I want you guys to know that. Like these years, years to come from now, when everything goes back to normal and whatever that may be for you, you'll see they're going to be talking about a specific moment in history about what occurred from like 2020 to then some, moving on. History, you guys. So higher swing low, price runs up. But you can see there's a Judas swing. Price drops below the monthly opening price for the yen futures. So this dash line here, the black dash line, is the opening price for the month. Look at how it drops down, fails to break a low, and creates a higher swing low on the first of the month because there's a low right there. And then it runs higher, breaking what? A swing high. So the trend formula would say if you break a swing high, you should be anticipating a higher swing low to form. And more times than not, that higher swing low forms inside of some type of inefficiency or speed to the upside, so a busy, or speed to the downside, a sibby. So you see that this fair value gap would most likely be where they would engineer the next higher swing low to continue this trend higher, to break the recent swing high it just created here. So just engineered buy stops, and now it's going to engineer sell stops so it could continue to go higher, to run that out, and then potentially get back to what? That 40-day look back high as well. So we also have IPTA here on the futures chart. Correction, this is the 20-day IPTA high here. Price is still going to try and target. So we failed to break the 20-day low, and price ran away from it, and it's looking to probably continue trending higher. And that's very interesting to see because now we're seeing all the yen crosses drop too, right? Soon as the Japanese yen gains value, all those crosses are going to go lower. So if you were to take a look at AJ in recent time, you could see we had that large run. We were tracking AJ last month, and we expected it to get back up to the 60-day look back high in February. See how it drops below February's opening price? The same thing that I'm showing you here in March happens in every single month. It's open, high, low, and close. There's a power three play. There's an accumulation, maybe the first or second week, then maybe the third week, maybe going into the second week, right? Mid second week, the manipulation occurs, going into maybe the third week, and then price starts to change its direction and gets all the traders short, and then it pumps up into a long. And we call that day to day, we call the price action higher to the IPTA levels. And I said that price is probably going to continue trending higher, but be cautious because it's really expensive, very expensive. And this entire leg up here, you had one down candle. We actually had two, technically three. 1, 2, 3. Those 3 days, if you would have brought after any of those 3 days, if somehow you arrived to the conclusion that the market was bullish after these down days, you would easily have swung yourself into hundreds of pips. We talked about how price is really expensive and probably going to turn around. And you can see how it's still blending into now. Yen started increasing for some reason. And then all the other pairs started to sell off. UJ dumping, going into March. At the end of February, it just consolidated. It didn't go anywhere. NJ, huge rally into February, right? Look at all this. This is all February. Higher, 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 higher. And then it finally tops. And now it's coming back down, taking out all the sell side that it created. Look at how there's sell side on this other half up. That's sell stops. Where's there other sell stops? There's one right here. And there's one here. And there's also inefficiencies on the way up. It's just rebalancing all of those. You can see. CAD-J, same thing. February, January, just running higher, running higher. And all this time, yen was decreasing in value. Dollar was going up. So dollar, yes, when dollar goes up, you will see the yen crosses increase in value too. Yes, that is a correlation. Price going down, you can see here, price is going down when the yen starts increasing in value going into March. See how it tops around the end, the last week of February, and then it starts changing its trend. It's already getting ready to trade the next month. You can see how it prepped itself. Makes a high, fails to break the high, and then it sells off. Price recently does what for EJ? Breaks a recent swing low. So what should happen? a lower swing high should form potentially to continue the trend because there's sell stops here. It just got to these sell stops right here in recent time. Yesterday, got to that sell stop. You have some down here too. You have even more down here. So you can start to see projections for a trend if it's going to continue trending lower. On the way in this trend, if it does continue selling off, you will see false moves, meaning you'll get those peaks to get everybody back in long, and then it goes short. Now, unless you have the edge on the market and you're understanding trend and you have an intermarket analysis, because just watching one pair alone is not always going to be justifiable because there are cracks in correlation in the market. And one pair may be doing this while the other is doing another thing too. So you have to be sure that what you're witnessing in this pair is happening in other pairs that are also similar to it. And what are pairs that are unsimilar or uncorrelated with it? It goes in opposite directions. They're inversely correlated. What are they doing? Are they also following that same code? If EJ goes down, are we seeing dollar go down? Are we seeing UJ go down? Those are some things you want to see. Are we seeing gold go higher? So hopefully this is insightful. We spoke a lot, but going back, just to wrap it back home, EU is most likely going to make a higher swing low if it's trending higher. If not, we probably are in some type of turning point, the tipping point of a buyer's market, and price is going to give us a nice reversal, changing trend. So let's see what happens. I still want to see price go higher, something like that, around the 20-day look back high. Even if price were to get back down to this last down close candle here, bullish order block theory. So just be aware of what you are currently observing. Peace.